Bi-weekly mortgages good or bad? I receive questions about this all the time. Ads promote bi-weekly mortgages and for the most part do not come from your original lender. They typically claim no closing costs, no refinancing, no points, no credit check, no appraisal, save thousands, cut years off your mortgage. Well, to achieve these wonderful savings, all you have to do is allow half of your mortgage payment to be deducted from your checking account every 2 weeks. It's easy. The basics are, normally you make 12 mortgage payments a year. Since there are 52 weeks in a year, a biweekly mortgage equals 26 half payments. This equates to making 13 mortgage payments a year instead of 12. By applying that extra payment directly to the loan balance as a principal reduction, your loan amortizes more quickly, requiring fewer payments. Now, how it actually works, you cannot simply mail in half a payment every 2 weeks to your mortgage lender, since they do not accept partial payments for legal and accounting reasons. The mortgage company would just mail your half payment back to you and claim you were late. Instead, the biweekly mortgage company is an intermediary between you and your mortgage lender. They automatically debit your checking account every 2 weeks for half your mortgage payment, then place your funds in a trust account. Basically, this is just a holding account for your money. In another 2 weeks, there's another automatic deduction from your checking account, and so on. When your mortgage payment is due, once a month, your funds are withdrawn from the trust account and forwarded to your mortgage lender. Since you are placing funds into the trust account faster than your mortgage payments are due, you eventually accumulate enough money to make the extra payments. The way the cycle works, it occurs once a year, or at very best, twice. A half payment is made twice a year. There will be 2 months in a year when you will be required to make a payment on the 1st, the 14th, and the 28th of the month. The extra half payment is applied directly to your principal balance on those 2 months, which causes your loan to amortize faster, pay off more quickly, and save you thousands of dollars. Therefore, the third party is holding your funds along with many others and earning interest off it, not you. Then there are the additional costs. There's usually a setup fee that runs between $195 and $350, depending upon how much sales commission is paid to the individual or company setting up the account for you. You also pay a transaction fee each time there's an automatic deduction from your checking account, and sometimes also when the payment is made to your mortgage lender. There may also be a periodic maintenance fee. Now, about the savings of the biweekly mortgage. By making principal reductions using biweekly mortgage program, your mortgage will amortize more quickly, saving you money. How quickly your loan pays off depends on your interest rate and when you begin making the biweekly payments. For example, on a $300,000 loan at today's interest rate of 4%, assume you started making payments immediately. Under a true biweekly payment plan, the loan pays off in 25.9 years, only saving you 4 years on your mortgage term. This program was really popular in the 1980s when interest rates were 12%. The loan would have paid off in 19 years, a much shorter time frame because the extra payment you made each year was larger. $3,085 per month compared to $1,432 at today's low interest rates. Here's a suggested alternative. Instead of hiring a company to manage your biweekly payment, you can accomplish essentially the same thing on your own for free. Just take your monthly mortgage payment, divide it by 12, and add that amount to your monthly mortgage payment. Be sure to earmark it as principal reduction. Now, many clients tell me, Scott, I won't be disciplined enough to make those extra payments each month. But in this internet age, banking online and automatic deductions are readily available. You can set up your own automatic deductions, including the additional principal reduction, and have it go directly to your mortgage lender. Since the deductions occur automatically, just like with the biweekly mortgage, self-discipline is taken care of. The last comment I want to leave you with is usually my comment that cash is king. Why put any more money towards debt equity than you have to? If you don't plan to own your house in 25 years, then making extra payments each month to equity really does you no good. If you sell your house in 15 years, you only get back exactly what you put into it. Except now, it will buy you less in 15 years than it will buy you today due to inflation and the cost of goods increasing. My suggestion, along with many financial advisors, is to put that extra payment each month into an interest-bearing account that meets your risk tolerances. If you do that consistently with auto deductions, at the end of 25 years or probably before then, you can then take that money and pay off your remaining balance on your mortgage. If you run into unexpected financial difficulties, you can then pull that money out of your savings account if needed. You don't need to apply to the bank to borrow your own funds back, if they allow it, because during specific periods in time when you are having those financial difficulties is not when the banks want to lend you money. And if they do, usually it'll be at a higher rate. If you can control your own money, then you can pull it out and treat it as a loan, just as if you were the bank. Again, that takes a little discipline, but if you set up the automatic deductions, then you are fine. It's either a case of you paying the bank or paying yourself. I hope this helps explain some of your options the next time you read the advertisements regarding bi-weekly mortgage payment plans. Please call me if you have any questions or need assistance or advice with your mortgage financing. I look forward to hearing from you. Have a great day.